Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Monday, January 9th, 2023. Please click like each and every time you watch the daily Tesla report and subscribe. Subscribing will provide you notification each and every time new content is uploaded, and that includes the daily Apple and daily Tesla report at this point and time. And please share the content, if you would, with friends and colleagues. So let's take a look at the big picture. This is a weekly chart. The first two images I'm going to show, just a reminder of the long term. You know, if you've been following the daily Tesla report since October, even before that in September, you know that we had a sell signal that played out on October 3rd, anticipating this channel bottom, long-term one-year channel bottom, anticipating longer-term containment. That didn't happen. It did contain selling for 4 or 5 weeks, and then we closed below it about a month ago, and that set off another sell signal to another meaningful support area that we actually have been testing the last couple of weeks. Another channel structure that is steeper in nature, this week between 98.22 and 109.93. I have 109.93 as a minor point at this time. I'll probably increase its strength as we presumably move away to the upside from here. It'll then regain its 3-4 star status as it continues dropping over time. 98.22, this formation, this channel bottom, we came very close to testing actually last week within a matter of a half a point or so, as I recall. 98.22 to 109.93, a wide range of midterm support, I'm going to say, that above which now, and as I've been saying, we should, by the end of February or sooner, rally back into the 160s. We do have 172.94 as a long-term area here, but the 160s, of course, being this former channel bottom here. So from here, we can rally back into the 160s by the end of February or sooner. I think the daily chart actually shows it pretty well. So now we're looking at the daily chart, the daily bar chart, the 98.22 to 109.93 region. This wide zone represents bottom picking opportunities, not only through January, but well into February, because once again, by the end of February or sooner, we should push into this significant zone of overhead resistance. And so now I think we can scale into, well, let's take a look at the same chart, but this is sort of showing you the meaningful upward pivot points that still remain. 119.33, I'll take a close look at that in a moment, but that is a short-term, actually a 2-week channel top, near to midterm by some people's measure. 119.33, I still have it weighted as only a session containment level, as you can see in the support resistance. Able to contain daily buying pressures, but that's possible, into later week. This formation can contain perhaps buying into later week, and we could fall back into this zone of long-term support following a test of 119.33 over the following 2 to 3 days. But if we did close today above 119.33, that would be our first sign of go with follow through buying. In other words, our first buy signal after having tested that midterm support that I mentioned a moment ago, that this week is between 98.22 and 109.93. And if we close today above 119.33, we should, within 3 to 5 days of that, push into the upper 130s, 139.90. I show it as 80 here. I'm not sure why. We'll make sure that is corrected. 139.90 is also part of a 140, 148, which I'll show in a moment as well. So if we close today above 119.33, we should, within 3 to 5 days, push into the upper 130s, where we could actually top out for the week and perhaps fall off from here into later January. That's why I say this 160s is expected by the end of February, because in the interim, we could have real trouble in the upper 130s in terms of topping out here on a weekly basis and possibly falling back into this long-term support area. If we close then finally above 139.90, within a week, 2 at the most, we should push into this 160s, where we could actually top out on a monthly basis, possibly into the second quarter. And we'll just take it one step at a time at that point in time. But I'll say again, as I've said before, that for those of you looking at buying Tesla as an investment over the course of not only through 2023, but even then, even beyond then, it would be a settlement above 168.33 that would tell me that the worst is over and we should show meaningful recovery as we move into Q2, Q3 of this year. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. Now, for the day itself, let me zoom in just a bit and show you this chart here. I've got 98.22, that long-term support represented as a horizontal line. I've got 119.33, the channel top I mentioned a moment ago. That is our session containment level. Might contain buying into later week, and if settled above, should set off follow-through buying. Now, I will mention that last Friday, after having retested yet again that midterm support region, we put out a key reversal low, a new one-year low plus, and then we also closed then above Thursday's high. That outside day closing above the previous high does in itself indicate an oversold market that should then continue higher. But nonetheless, I'm still using 119.33 as our aggressive upside pivot point. So if you're playing the short side right now, especially if you're a swing trader or a 1 to 2 week, 2 to 3 week position trader, I wouldn't suggest being short with a settlement today above 119.33 if your near-term time horizon is, 3 to 5 days, 2 to 3 weeks, because we could get an aggressive rally at 139.80 pretty quickly. And once again, those 160s, long-term resistance in reach over the next 3 to 5 weeks, perhaps. So I think that kind of covers the upside. Let me mention one more thing. 111.76 is a very simple 3-4 day channel top that we closed just above last Friday. It's at 111.76 today. It is our soft intraday pivot point. In other words, opening above 111.76 allows this to be considered day support, especially for you aggressive day traders. You just know that we should then test 119.33 on an intraday basis. If we break or open today below 111.76, we may fall back to 98.22. We do have all these carefully chosen minor points to the downside: 109.93, 106.62, 103.41, but 98.22 may be in reach if we open today below 111.76. It's not a sell signal per se. It's just a sign that the market has room to ease back. And 98.22 is your next stick your neck out support level to buy on a daily basis, weekly basis, monthly basis, and even quarterly basis. That is to say, into February trade. So that covers the upside today. I think I've covered it pretty well. If we close today below 98.22, and I'm not expecting it, but if we did, I would expect something like this. A 78.43. This is a new descending channel top that is based in part on last Friday's high. It would be expected within 1 to 2 days of closing below 98.22, and possibly by the end of the week, although I have my doubts. I'd say by the end of next week. If we close this week, Friday, below 98.22, we should see this 70.66 formation within 1 to 2 weeks of doing so. 70.66 on the way down, able to contain selling on a weekly basis, possibly into later January. From here, we could rally back into the upper 90s again within a week or two of doing so. And as I've been mentioning, that 70.66 lines up pretty well over the next few days, actually, with 64.59, this pre-COVID high going way back to January of 2020. Last thing I'll say is that if we do finish the week out Friday below 98.22, as I've been saying, I give it about 2 to 3 months before we unravel all the way back to this COVID March 2020 low of 23.36. But I'm not expecting it, only if we close below 98.22. Until then, as I've been saying, 98.22 to 109.93 remains our bottom picking territory as we continue into February, and above which, still anticipating this significant 160s overhead resistance over the coming weeks that can contain monthly buying pressures, possibly into Q2, and if settled above, marks a good long-term low for Tesla. I would expect continued gains then into the second quarter. That is all I have for Monday's Daily Tesla Report. Please click like and subscribe. I'll be back tomorrow with Tuesday's Daily Tesla Report.